Microsoft and Google just reported. They both beat on EPS and earnings. Let's talk about Microsoft first. They reported $2.99 per share, crushing estimates of $2.65, and they reported revenue of $56.5 billion, crushing $54.6. It is currently up 4.5% after hours to $345.56. Guys, this company, this stock was down big for a while there. Let's see. 52-week low of 211 back on November 4th, 2022. Also coincides with Meta's all-time low. Sorry, not all-time low, but low of $88 a share on that exact date. So Microsoft is up a lot, 4.5%. Let's look over their press release. Guys, revenue up 13%. Operating income up 25%. Net income up 27%. Diluted earnings per share up 27%. Guys, nothing here is anything short of amazing. They crushed it. They absolutely smoked it. And of course, everybody's going to reward them with after hours gains. But remember, we're here to look at companies and say, is this a reasonable price? Just because a company beats doesn't mean the stock should go up. And I want everybody who's watching this video for the first time, who's watching our channel for the first time, to remember, I don't care about quarter-to-quarter results. Just this morning, 3M reported, I own 3M. Don't buy it just because I own it. I own it, and it crushed, and it went up, and I said, humph, I prefer it to go down because I'm looking at the long-term dynamic of the business. Is this business on the right track for doing better and better? Earnings beating or net missing? Remember, 3M beat, even though their earnings were still down because they guided lower. So what else is there? They mentioned AI in line 6. Thank you very much. Cloud revenue of $31.8 billion, up 24% year over year. Incredible. Let's see some other major things. Let's see. Revenue in intelligent cloud. I assume that has something to do with, I wonder what that's to do with. Probably AI of some sort. Increased 19%. Let's see. Microsoft returned $9.1 billion to shareholders in the form of share repurchases and dividends in the first quarter, and that's a poop. Guys, it's an expensive company. Let's go take a look at it. Let's make this a little bit bigger. The company is currently selling for 34 times earnings and 41 times free cash flow. Why are they buying back shares? Their dividend is small. I'd actually prefer that. Because what acquisitions are they going to make this $2.5 billion company bigger? What could they possibly do? I don't know. I absolutely don't know. They did $56.5 billion in revenue. The same quarter last year, which is their first quarter of their fiscal year, they did $50.125. So quite a big number. They even beat last quarter's $56.2 billion. Wow. Okay. So let's see what analyst estimates are for this company. Double-digit growth on earnings per share. Double-digit growth on revenue. Very bullish on Microsoft. Very, very bullish. So guys, let's do our stock analyzer tool. Now guys, if you're new to the channel, we have an amazing community of thousands of investors, and we have an amazing software package that you get free if you're part of the community. It includes all the tools listed here, 7-day free trial. Go check it out. 7 full days, full access, no holds bar. You get everything here. Go to everythingmoney.com. Check it out. Sign up for our 7-day free trial. You will not regret it. But let's look at our stock analyzer. Let's look at the last time I did Microsoft. When was that? September 27th, so about a month ago. I did a 1 year of analysis. So July 25th is when I did, oh, that's what I was doing. I was testing it out. So July 25th. All right. I made assumptions for revenue growth of 6, 9, and 12% for the low, middle, and high. I don't know why I did that because I actually think that's a little high. I'd prefer to do 4, 7, and 10%. Profit margin. I did 32, 34, and 36. I like those numbers, because they've done 34% the last 5 years. And if they do more for cloud computing, that should solidify that profit margin. And for free cash flow, I don't like the fact, guys, that free cash flow in the last 5 years has trailed profit margin. But it could be from a lot of investments they're making that have hurt free cash flow and will take longer to hit the net income. For PE, guys, Microsoft's a premium company. I think it has a moat status, and it has a high return on invested capital. Look at this, 22% in the last year, 24% in the last 5 or 10 years. You should pay a premium to the market average of 15 when you have a high return on invested capital business like this. So I'm looking at this here. I put 16, 18, and 20. I'm actually going to modify that a bit. I'm going to do 16, 19, and 22. And for my desired return, this is my margin of safety. Now they're up, by the way, $18, 5.5% to $348.50. I think I saw $349 at one point, right when they reported. So they are holding steady on this really high gain. I did 10, 12, and 14% for my desired return, okay? Because I beat it up so much here, I'm okay if I only make 10%. And remember, folks, this return includes the dividends they're paying. I hit the analyze button. The current stock price is $349. Here's my prices. 125 to 145, 200 to 234, middle price of 160 to 185. Guys, if I put 10% in all across the board, that says that the company is worth, on the high side, 281 to 315, middle side of 190 to 215. That's why it's on my watch list at 210. I want to start taking a look at that price, probably selling some cash secured puts to generate income before I buy this company. Guys, I just think it's overpriced. What revenue growth do you have to assume to make it worthwhile? I don't know. Let's call it 7, 11, and 15. Yeah. Even then, in the middle assumptions, you're not there yet. At 10% return. So guys, I just think it's overpriced. All right. So let's go to Google. Google reported $1.55 with expectations of $1.45, and they reported revenue of $76.7 billion, larger than the $75.8 billion that was expected. And Google is down $8 per share. How is this possible? A tale of two companies. They both beat. They both did well. And off the dribble, Google was down immediately 5.5%. This is so confusing to me.
Google missed on their cloud services.
Oh, what did they miss? Oh, that's great information.
Cloud revenue, $8.41 billion, missing expectations of $8.6 billion on the cloud services. Barely a miss. When you...
So they missed by $190 million, and they're wiping out, $60 billion, $70 billion, $80 billion in market cap. Guys, this is why markets are not rational. I think this is hilarious. So if you like Google at this price, you should be happy about this. If you want to buy more Google, this should make you beyond happy. Let's go look at Google real quick. Let's look at their earnings release. Let's see. The fundamental strength of our business was apparent again with $77 billion in revenue, up 11% year over year, driven by meaningful growth in search and YouTube. Yeah, YouTube. Guys, the top 2 search engines in the world are Google.com and YouTube.com, both owned by the googly moogly. Google paid $1 billion or $1.65 billion for YouTube back in 2006 or 7, and now they generate big money in revenue. Revenue was up 11%. Operating income was up. Operating margin was 28% versus 25%. Other income and expenses. Look at this, guys. Big fall. I love this. They went from losing almost $1 billion last year, same quarter, to only losing $146 million. They made $1.06 last year in the quarter. They made $1.55 this. That's almost a 50% increase in earnings. Almost a 50% increase in earnings from last quarter to this quarter. They were expected to make $1.45. They reported $1.55. They're still down 5.5%. They're still down 5.5%. Unbelievable. Okay, let's see if there's anything more here. Let's look at YouTube ads right here, guys. So, YouTube ad revenue went from $7 billion to $7.9 billion, over a 10% increase. 11 or 12% year over year. Search went from $39.5 billion to $44 billion, another over 10% increase. Guys, they crush it. Their other revenues, $6.9 to $8.3 billion. No wonder they only lost $100 million in their other businesses. That's awesome. That is freaking awesome. A 10% increase in overall advertising revenue. Wow. A decline in Google network. Okay, look at this. They're getting beaten up for Google Cloud services. Look at this. Google Cloud, $6.9 billion last year, $8.4 billion this year, and they're now down 6%, 6.1% after hours because of that. Because they missed on expectations. Guys, I want you to see, if you're a long-term investor, your friend is missing. The friend you have, I said your friend is missing. Your friend is not missing. You will have a friend when they miss expectations. If they look at this. Look at this increase right here. 1.6 billion on 6.8. What is that? Almost a 30% increase in revenue, and they're down because they, instead of doing 8.6 billion, they did 8.41. This is what I want to teach you. Don't focus on just the results. Use it to your advantage. Use it to your advantage when a company misses. That's what I love here. That's what I freaking love. Operating income and lost, or losses. Google services. So Google Cloud went from, look at this. They went from a loss last year to a profit this year. Beaten up. Other bets, 1.2 billion to 1.2 billion. Corporate costs unallocated. Ooh, big drop, big jump in that. So total income from operations from 17 billion to 21 billion. That thing prints money. I still remember the first place I was when I heard about Google.com. I was in the fishbowl at the University of Michigan. If any University of Michigan people are watching, I was sitting right there at the fishbowl, and a friend of mine named Chris said to me, I was looking at Yahoo. He goes, dude, don't use Yahoo. There's a new one out. It's called Google. Went to Google.com. Last time I ever used Yahoo. Unbelievable. Unbelievable. It was so simple, so quick. It was great. They did a great job by focusing on the consumer. They want to make it so that if you search something, you immediately got what you're looking for. Immediately. It's awesome. All right, let's go check it out in our software right now. Google. All right. Let's see their 8 pillars. Guys, we love this. Microsoft had the same 8 pillars, by the way. 2X's from valuation, 35 times earnings, 35 times free cash flow, check mark everywhere else. Guys, they have like no debt. Look at this debt. They can pay off their debt with 9 months of their free cash flow, of their last 5 years of average free cash flow. So it's probably 6 months of their current free cash flow. Why do they even have debt? Just pay it off, guys. It's only down 5.25% right now. Okay. Analyst estimates, just growth, double digit all day long, doubling their earnings per share in the next 4 years. Revenue, double digit again. All right, let's look at the stock analyzer tool. Let's look at our history. When did we do Google last? October 2nd. I might be conservative on these revenue growth numbers, guys. 5, 8, and 11. Remember, I'm doing a 10-year analysis here. Those revenue growth assumptions were based on 4 years. So that's why I went a little bit lower here. Profit margin, 21, 23, 20. I still like that. Same with free cash flow. PE, I want a premium for Google. It's well-deserving of a premium. Increasing return on invested capital. This means they get a better and better return every single year on the money that's invested in the business. 17, 20, 23. And for my desired annual return, 10, 11.5, and 13. Pretty reasonable here. I can make the argument, I'm going to go a little bit lower. I'm going to go 9, 10, I'm going to go 9, 11, and 13. Hit the analyze button. Boom. Guys, 85 the low, 145 is the high, 112 in the middle. I have it on my watch list at 115. I'm actually going to increase that to 120 so I can start selling puts at 110 or so. So it's going to notify me in the software. But guys, if you believe the highest assumptions and you like the company, then you're a buyer today, right? 145. I don't know. All right, guys, again, if you want the community, go in there, have a conversation with people about what they're looking at for Google. And guys, if you're already in our community, start the conversation in the stocks chat or the general chat. Tag me. Let me know what you thought of this video. Microsoft, Google, everythingmoney.com. Go sign up for our free 7-day trial for the biggest online YouTube value investing community. Take